Governor, thank you for talking to us.
You're welcome.
The Bank of England's chief job is to try to keep inflation as close to 2% as possible. Can you tell us where you're expecting inflation to go over the next kind of 12, 18, 24 months?
Well, what we've currently got is an increase in inflation, which has really, taken hold during this year. And unfortunately, we expect that to continue over the winter period. In our latest forecast, we think it will probably peak, sort of spring next year, and then start to come down, around 5%. What we have signalled today, and I think this is the very important thing, is that we do think that interest rates will need to rise, that the official rate will need to rise. We haven't done it today. It was a very close call today, I should emphasise. And the reason we haven't done it is because we still need, in our view, to see hard evidence, particularly of the state of the job market in this country. That's important. The really important question there is how has the ending of the furlough scheme affected the job market, labour demands, and therefore what is likely to be wage demands in this country? And we haven't got any real clear line of sight of that at the moment. There were far more jobs and people on the furlough scheme at the end than we thought there would be, interestingly. So what is going to happen? What has happened to those? We have quite a lot of anecdotal evidence. We all go around the country, we talk to people, but we want to see the evidence before we reach a hard and fast judgment, because that's important.
But for families who are looking at their cost of living going up, they're looking at their gas bills, they see that inflation is very real and it's having an impact on their finances, and they look to the bank and the bank isn't acting.
Well, can I just be clear on this? So we have to look at the causes of inflation. Many of the causes of inflation at the moment would not be tackled directly by raising interest rates. It wouldn't produce more gas, it wouldn't produce more semiconductor chips to allow more cars to come onto the market, for instance. It wouldn't tackle any of those, what I call supply chain issues, would not be tackled. And indeed, actually, it would have the worse effect. It would raise interest rates, it would slow down the economy, and it would probably cause unemployment to rise. Now, we will have to take that step if we think that there is a risk to the economy in terms of it overheating. But it would not be the right answer to a shortage of gas to raise interest rates. If the only thing we had at the moment was a shortage of gas, that would not be the right answer.
Final thing, as Bank of England Governor, looking there at 5% potential inflation, what does that inspire in your mind? Do you feel comfortable with it? Do you feel uncomfortable about it?
I don't think any governor of the Bank of England would feel comfortable being in that world. I understand, and we spend a lot of time understanding why we are where we are, the shocks that are happening in the world economy. And of course, we haven't mentioned COVID. I mean, the difficulty of the recovery from COVID, of the world economy from COVID. But of course, we want to get back to the inflation target as soon as possible. And all our thinking is directed at what is the best route back to the inflation target for the economy as a whole.